episode 9. Thanks for locking in with us every week here. I'm here with Miller Cole, a new panelist on the show. If you follow the website over at the .net, you've been reading his articles. He's been doing great work with the interviews. He's got a big interview coming up with Dylan LeClaire, Metaplanet, which we're really looking forward to. We've got Quentin and Eve from the One Chair Pod and Chase Palmieri as well. How's it going, everybody? Miller, how are you today?
I'm all good, thank you, Tyler. I'm glad to be on finally. We've discussed for a few weeks now about getting me on, so very excited to get started and obviously great to be with a great panel.
Yeah, really excited to have you, and all the best to England's football team here as they get a chance to close out in the World Cup. We'll see how it ends. Every Englishman I talk to is uh, like just scared about what might happen. But it's about time England brings it home. For the first time in what
Exactly.
60
No, we're
years.
very excited for tomorrow night. We're very excited.
Good stuff, good stuff. And Quentin, welcome back to the show. It's been a few weeks since we've had you. I've been calling your podcasting partner Eve Quentin in your stead anyway. So thanks for hopping back on, man.
Yeah, great to be back on.
You got it. And Eve locked in as always. Are you feeling bullish on U.S. dollar reserves?
Not really, actually. Not really.
We'll get into it. Get into it. Just finishing around the horn here. Chase, how's it going, buddy? You ready to talk shop?
Yeah, always. We're taking over. Bitcoin Treasury Takeover. Let's go.
Great stuff. It is the takeover. Eve, I'll throw it over to you. Maybe you can lead off with the big story this week, and strategy, really increasing that stockpile. Something I called for, but is it interesting? Does it matter? And is it too big?
You mean the 18 Bitcoin from Strive? No, I'm joking. No, so we had strategy increase their USD reserve by 450 million US dollars to 3 billion. And all of that was actually funded through the common share MSTR ATM. And as you pointed out, am I bullish on that? I believe not. And we've discussed this in a past panel or in a past episode with Chase, where Chase mentioned that he would like to see even a 5-year, I think, USD reserve. And I was more on the side of the Strive guys, where they say 18 months is fine. And actually, I believe also Matt Cole has come out in one of the hurdle rate podcasts where he mentioned that exactly having a too big of a USD reserve kind of becomes counterproductive because of all the debasement. Obviously, that's one thing. So the costs to having this is also it becomes really a burden to the company, right? And exactly now we see strategy that has now, if I'm not mistaken, two years, 20 months or 24 months of reserve, and I believe that's slightly too much. It's still okay, I think, but yeah, I would not like to see them keep increasing this USD reserve week over week. I was already happy for the 18 months. Let's see how the market reacts. I think the markets, anyways, were kind of down yesterday, but I don't think it was directly linked to this news. So let's see a bit how the preferreds and the MSTR common share reacts over the coming weeks with this new USD reserve. But overall, I hope that they don't keep increasing it. And maybe I can already throw it over to Chase to hear his counterpoints on that.
Well, I mean, look, the reason for the 5-year thinking of the USD reserve is that clearly, and strategy would agree now, size does matter. So, we can get into the nuance of how much is too big, but at the end of the day, this is a credit issuing company. The more USD reserve they have, the more at ease the fixed income investors are who are buying STRC, the more that they feel like Bitcoin's price swings or volatility is irrelevant to their ability to receive their dividend obligations. And, maybe 5 years becomes too big of a drag on the model, but in my opinion, this is like peanuts if we're talking about a future trillion plus dollar market cap company. So I'm in favor of just getting it done, rip the Band-Aid off. Already now the USD reserve is bigger than it's ever been. So clearly strategy seems to be at least directionally taking that feedback and thinking more closely along the lines with what I'm thinking, which is just overpower the market with the USD reserve. And then, you know, once STRC is back above par and we're issuing new STRC, maybe we don't grow the USD reserve in tandem and we just see kind of what happens as we continue to scale STRC issuance, but maybe we just leave it at, call it a $4.5 or $5 billion USD reserve. But I would like for them to now go the opposite direction and experiment with what happens when we really overpower the market with the signal that we have liquidity.
Yeah, what's your take on the sizing of the reserve, Quentin?
I think we're in the sweet spot now. 18 to 24 months, I think, is something that makes sense, especially if you look at the duration of previous bear markets, and if you think that they would need to have this reserve in place mostly during a bear market. I think now they were quite aggressive in refilling it, right? They saw that it was a mistake to draw down this reserve massively to pay back the converts, and reacted to that after STRC crashed to almost $70, right? So it was a good, fast reaction, but the cost of it was significant to MSTR shareholders, right? It was quite dilutive in Bitcoin per share. We saw that, and also last week's purchase or increase in the USD reserve for 150 million. They diluted the shareholders by 1%. So it's quite significant what they're doing currently. And I think now I think they're in a good spot now. And what I would like to see going forward is that they do it in a less spectacular way. And you know, by the way Strive is doing it is actually quite elegant in my thinking, is that they issue SATA and they don't buy 100% of Bitcoin with the proceeds. They put part of it in their USD reserve, and with part of it they buy Bitcoin. And I think that's how strategies should do it going forward. Once STRC is back at par, is to always put a bit of the cash that they raise into the cash reserve. And this then would have, of course, a lot less negative impact on Bitcoin per share, and would stop diluting the common shareholders. Because I think as a common shareholder, you have been suffering quite a bit anyway over the last year, and the last few weeks, the operations of the last few weeks certainly didn't help, right? But I think it was necessary to bring the Bitcoin, the USD reserve back into a healthy level. But it hurts for the common shareholders.
Yeah, it certainly does. I think we're kind of hitting that spot where they're going to be comfortable, you know, with this, you know, like you said, 18 to 24 month runway. You know, I'm going to advocate for that, you know, a little bit longer runway in a bull market, and then with some opportunistic drawing down in the bear market, which runs counter to, I think, the position that a lot of people have. So, you know, maybe I'll end up being wrong there, but yeah, I think they're going to, seeing the success and like you said, Quentin, the elegance of Strive's approach to this in maintaining, you know, roughly that 18-month runway, I think they're going to sit in that pocket and do something a little bit similar. We saw them sell the Bitcoin to fund the quarterly dividends, and I think that's something we'll see continue. It'll be interesting to see in a couple of weeks on the Q2 earnings call how concrete the team at Strategy becomes, you know, with the messaging around this, and I do expect that we're going to see some clearer and clearer guidance about how they approach the dividends and the USD reserve. What's your take, Miller, on you know, Strategy getting over that $3 billion amount, and how important do you see that dividend runway?
Yeah, thanks, guys. I'm quite similar to Quentin in terms of, I think I've advocated for 24 months to be a sort of floor, and I think that's like quite a nice spot for Strategy to be at in the short term. So what are we at now? 20.4 months, I believe, last time we checked, of USD coverage. I'm happy with it. I think with the retirement of convertibles, we saw a clear acknowledgement from leadership that a mistake had been made. Personally, for me, I didn't oppose them retiring the convertibles. It's just the way in which they did it probably shook the market a bit more than it did. Fong Li also acknowledged it probably came at a bad time. Obviously, we had the Bitcoin price drop at the same time, sentiment managing to fall even more than it already has. So yeah, bit unlucky there, but I'm happy they've acknowledged it and taken it on the chin. I also do really value that point on Saylor, Tyler, Quentin, you just both made. I think Saylor really have been in the last couple of months leading the way in terms of the innovation for the Treasury model. Obviously, with daily dividends to begin with, and now also what they've been doing when Saylor is at par. They're sort of acknowledging that it's important to keep some level of USD reserves alongside Bitcoin. And I've seen a few people often speak about during this summer, whilst Bitcoin's in the dollar is, potentially strategies should be focusing on replenishing its USD reserve before anything else, maybe even not touching its Bitcoin in terms of buys over the summer or so. I think it was Mike Flom I saw spoke about that, and it's quite an interesting concept. So I think there is an argument there to be had around how they balance out stretch when it comes back to par. I think that's something definitely to discuss further down the line. But overall, feeling pretty content with things. Wasn't as keen on them using the ATM this week for the replenishment of the USD reserves. I thought I was potentially expecting a Bitcoin sale, but in some aspects, I guess it was accretive to shareholders, they'd argue, in terms of MNAV. So I'm nitpicking a bit there, but overall, quite happy with how things are at the moment.
Yeah. So, we've still got STRC trading, well below par in the 80s. Sato's held up better, and I've got an episode of the podcast that's going to be published next week, where I sat down with Matt Cole, the CEO of Strive, and he said, we covered this on the show, but when he announced that they're willing to let Sato run above $100, that was really, came as a direct consequence of seeing the extremely high borrow rate on the shares of SATA, and seeing so many shorts, coming out and taking huge, I think it was $100 million short positions on the stock. So it'll be interesting to see. The borrow rate is still high on SATA, and I'm curious, what do we think gets them back to par? They've pulled the levers they can, I think, structurally. And I'm curious to see what it'll take for the shorts to completely unwind this trade.
Am I fine to jump in here first, guys? I've sort of what I was thinking about this week, discussing, I was particularly focusing on stretch and obviously the struggle we're having at the moment. Staying below sub $90 or so, we're really struggling to break that wall. I found a really interesting chart this week from Thomas Perfumo, who is the chief economist for Kraken, and he essentially plotted a graph where you had on the y-axis essentially the stretch spread over the Treasury bond, and then on the x-axis we have Bitcoin price, and he sort of mapped out this linear regression where we saw a 71% relationship between Bitcoin price and the variation in stretches spread. So effectively the yield the market's trying to price in. And what we're seeing is that when we're going down and Bitcoin price sentiment's dropping, we're seeing this really increasingly affect the spread. So the argument Thomas made, which I wanted to sort of touch on here, is that if we're looking at about 71% variation explanation by Bitcoin price, yeah, thank you for that. I think that's a different one there, but still 71%, 86% overall. I think the way we want to look at this, and at least in my opinion, is that it's great for the companies to keep trying to pull these levers, etc. But I don't think we're really going to get that big jump to par and break through those shorts until we get a nice move up, potentially another 10%, 15% or so to around the 70k region, as Thomas himself said. Welcome to be challenged on that, but I think sentiment is probably playing a big part at the moment, because I think most of the time the companies, Strategy and Strive, have done some pretty good stuff in trying to get us back to par, but it's just not really doing it yet. So I just wanted to propose that forwards as potentially my way in which we're going to have to see us move back to par. It's just a sort of regaining a bit of sentiment.
Yeah, I'll jump in there. So I agree. I think that strategy and team already understood that sentiment drives their premium to MNAV. But I think that perhaps they thought, or perhaps they'd communicated to the market that they had more control over their ability to keep STRC close to par, as perhaps they really did. And that in the end, sentiment is first going to take out the premium, but then the next thing it's looking for in a bear market is going to be lowering the peg, or not the peg, but the ability for STRC to remain close to par. So I think a lot of this is sentiment driven. And for anybody that's been in the space, as long as this group this is some of the worst sentiment we've seen maybe ever in my career as a Bitcoiner, definitely when it comes to Bitcoin treasury companies. And so I think it's to be expected that until sentiment gets out of this absolute bear pit, that STRC and any premium to MNAV are going to be kind of the first dead bodies in the bottom of the pile.
Yeah, I agree with that. I think we'll need some sort of recovery of the Bitcoin price to have STRC trade back to par. I think it will be interesting to see if once it does, how stable it's going to be, because now we have experienced quite a few times that sharp drops before the month of June. We had already 2 drops in November of last year and February of this year, then May, June of this year. And I think it's quite a smart thing that Strive did with communicating that they might not issue additional shares at 100, maybe something that strategy would consider as well. And then we potentially would also have some volatility to the upside. And I just wonder if this stability that we've seen between March, April, May of this year, if it's ever going to come back to that, or if it will stay in a larger range also once it recovers, just given the history and the way it's moved. I don't know if you have any thoughts on that? Anyone on the panel?
Yeah, maybe an additional point to STRC specifically, right, is also the cleanup of the balance sheet, right? That's another aspect that comes to mind, because during last week we had an interesting discussion also with Alexandre Lézé from Capital B, and they're watching those products like a hawk as well, right? And he exactly mentioned, for example, how STRF on top of the pile, who is also supposed to have the notional is also at 100, but it still trades at a nice premium compared to STRC. So there is something there that does help this instrument hold a better level than STRC itself, because STRC is junior to STRF, right? So that I thought was an interesting observation. And going back also to the convertible notes, right? Once all of this is cleaned up, I think that's going to help STRC move up the ladder, and hopefully it's going to strengthen this par, or maybe not par, but at least lessen the volatility on STRC. So I think that's definitely a step that needs to be taken. And as we know, this is not something that needs to be done over a period where probably Bitcoin gains in strength. So it goes a bit hand in hand with the price appreciation of Bitcoin, which you guys touched on.
I was talking to some folks at the Strive team, and they were explaining to me why they think that SEDA is doing a little bit better right now at maintaining close to par. And what they said is that because of the complexity of Strategy's balance sheet, that it's just very hard with each new maneuver for the market to quickly determine, was that an accretive action or was that somehow dilutive even on a Bitcoin per share basis. And there's just more math to do, more like nuance to the structure. And so it becomes more of an unknown for investors. And that because of that, SEDA is benefiting from its simplicity of its balance sheet and the fact that when it makes a move, it's very clear, very straightforward whether or not it was accretive or not.
Yeah, I do agree with Chase there. I think the beauty of what we've seen with Strive the last few months in terms of pre the big dip, we saw that massive outperformance year to date of Bitcoin, is the simplicity of the balance sheet. And I think we've probably seen that reoccur here. I think it's probably a problem that strategy is acknowledging, again, trying to retire the convertibles and moving towards accumulating Bitcoin through the preferreds rather than the convertibles. I think Saylor spoke about this like almost evolution of how the balance sheet works as strategy. So I think long term, Chase, on what you said, I think one of the biggest things strategy can do to help itself and help stretch is to essentially clean the debt off the balance sheet. How they do that at the moment, I'm not sure. But if we get some sort of, I guess, increase in Bitcoin price, expansion of MNAVs, it makes things a lot easier in terms of capital raising to clear the debt. But I think that's definitely an important step strategy's got to take, because Strive currently have such a big advantage over them in that regard.
I think that's a great point. And yeah, I mean, if strategy could run back the last cycle again, I think, you know, I guess they never planned necessarily for the digital credit market to take off until they did design those products. It seems like they really came together quickly last year. If they could retire a lot of those converts, more quickly during the last bull market, I think they would have. But that was obviously, part of the funding that got them that really leveraged exposure to Bitcoin's price and drew in a lot of dollars into the company. So yeah, I think it would be really interesting to see what they do in this next bull market, how aggressive they get with the ATM to retire the debt ahead of time. Because yeah, I think the model from SATA has been really interesting. A key point that we're often comparing the size of, or we're often comparing the instruments SATA and STRC side by side, but they are just massively different in terms of scale. You've got Strategy with 850,000 Bitcoin in the balance sheet. You've got Strive that's got about 20,000 Bitcoin now. And I think we do miss that scale. It is interesting that the market's pricing in, I guess, STRC as a bigger credit risk than SATA, despite the differences in the balance sheet. But it'll be interesting to see if these instruments both compete for some of the same dollars in the next bull market, and what that looks like, and if SATA can really fuel that Bitcoin stack that Strive has put away on their balance sheet. I know even Quentin, you guys have to drop here. You've got a really exciting podcast that you guys are recording. I'll give you kind of the word on that. Matt Cole on my podcast said, again, I'm kind of teasing a bit of what he said, and he's mentioned this in public before. He said that he's like, Strategy is going to have the biggest Bitcoin balance sheet, but Strive wants to be, the fastest growing company in the world. Is that something that's achievable in the next market cycle?
Yeah, I think he mentioned something in the tunes of they want to be the fastest growing in terms of percentages or something like this, right? And I think it is. I mean, the only competitor right now that potentially would be a competitor is probably Metaplanet in Japan, because of the, again, going back to the advantages that they have with the Japanese market, the fact that they have a foothold in the Japanese market and in the US markets, that they're probably getting very close to the digital credit. And I think they also have a very strong investor base in Japan. On top of it, I think the Japanese market, if you think sentiment is strong overall, I think there is a leverage play here in the sentiment of Japanese investors as well. So for all of these factors, I think Metaplanet could be the one and only company that could rival Strive, in my opinion. But obviously, Strive right now is ahead in that sense because they have SATA out, and we've seen how well they're executing. I mean, they've done so much in the time that they've been out there. In the meantime, obviously, Metaplanet, at least from an investor's perspective or outsider view, it feels like they're a bit slower, but we know very well they're working behind the scenes, and we've seen some of the puzzle pieces come together already. So that's the one caveat for Strive is really what happens to Metaplanet. And otherwise, I think there is no other competitor, at least not today.
Yeah, Quentin,
Yeah,
do
nothing
you-
to add. I think,
No-
yeah, fully agree with that. And yeah, today Stripe has the advantage, but as soon as MetaPlanet releases some of their own preferreds based in Japanese yen, with the low yield environment in Japan, I think, yeah, it will be difficult to catch their growth.
Sounds good. Sounds good. And like I said, even Quentin have to drop for another interview. We've got we'll keep this going for a few more minutes here. There's just a couple more things I want to discuss. Yeah, thanks for dropping in, guys. And I guess I'll use this moment to plug. Make sure if you haven't got your ticket yet to the Bitcoin Treasuries conference that's coming to New York City, September 28th. It's the follow up to the Bitcoin Treasuries Unconference as it was known last year. But we're gonna have it's the room where deals happen, and you're not going to want to miss this. We're coming out with a big speaker announcement tomorrow on Wednesday, July 15th, and this is your last chance to get these rock bottom prices for the Bitcoin Treasuries conference that's coming up. And you can see the link on screen, bitcointreasuries.net/conference. You can use the code SECOND, which is the venue, SECOND, to save 10% on your tickets. But grab those today. It's going to be a lot of fun. I was talking with the boys before the show today, and we're really excited about what this conference can be, and it's going to have all the names you know and love from the Bitcoin Treasury space, and some names outside of it, and some names that you might not expect to see at a Bitcoin Treasuries conference, but people who are doing really interesting things with Bitcoin on the balance sheet. So make sure you grab your tickets, reserve your seats there today. And one thing I'd like to kind of highlight, Miller, you wrote an article on the site this week about I think it just published today about Smarter Web facing a court ruling that could unlock digital credit potentially for them. Could you walk us through that a little bit about their capital reduction and how that works for paying dividends? And between MetaPlanet, between Smarter Web, companies that have really positioned moving toward digital credit, do you think this is the moment that we see some competitors in the space to offer these products, maybe in different jurisdictions?
Yeah, cheers, Tyler. Yeah, it's very, very nerve-wracking day for many Smarter Web investors. I put out a tweet for my post earlier, and they're all very eager to read about it and to see if they can get any possible news. In terms of what's going on, well, basically in the UK, we've got a very complex regulatory sort of outlook we've got to navigate through. And Smarter Web, since they began the Treasury strategy, have sort of led the way in the UK. And of course, credit to the team for that, as it's allowed a lot of other treasuries to begin in the UK. They're looking to essentially, in a way, book a loss on their balance sheet. And it sounds weird, but I'm trying to make this as simple as possible. By booking a loss, they can essentially pay distributable dividends from their reserves. And we're looking at about, at first glance of analysis, about £132.5 million in terms of what they can derive from the losses, etc. And basically all we're waiting for today is a ruling from the High Court on whether they can do this to essentially free up that money. Of course, no official announcement on preferreds, but we've had a lot of clues along the way. And Andrew and team have been very eager to drop those clues in and let us know. And at the recent conference, they're very eager to discuss it as well. In terms of the wider picture, I think it's a really exciting time, especially in the bear market, to see companies building and trying to innovate and do what they can to gain value to shareholders during what it has been obviously an awfully tough period. MetaPlanet, I'm excited to speak with Dylan on Thursday about the acquisition of Shiba and now MetaPlanet Securities. And we'll have a nice interview and article come out about that, which everyone can have a look at. What I'm seeing really on the ground at the moment as well is Capital B. They've been quite opaque at the moment about what's going on, but we've seen some sort of teasers that they're in this race with Smarter Web to be the first European company to launch preferred stock. So it'd be exciting to keep watching that arms race as well. So overall, lots of companies building, really exciting time. And yeah, keep your eyes peeled on that High Court ruling.
Yeah. What do you think, Chase? is the scale of, a smarter web, a capital B with, they each have around 3,000 Bitcoin. Is that enough scale to launch a pref? It seems like, moves are being made in that direction. Strive obviously launched the pref, after basically announcing their merger with Semler Scientific, and that was a way they, added 5,000 Bitcoin or so to their balance sheet. Is Do you think any more M&A activity is what needs to happen before we see more pref competitors in the marketplace?
There's definitely room for more prefs and especially new variations of the pref. So what I would point to as more important than scale, because you're not going to be able to compete on scale, right? Strive knew that they weren't going to be able to compete on scale against strategies. So what did they do? They had to try to compete in terms of differentiation, and they did that with, as we already mentioned on the show, kind of the simplicity of the balance sheet and the narrative and the no debt. And so what I think we're going to see out of the next tranche of Bitcoin Treasury companies issuing preferreds and these digital credit instruments is new variations, new ways to protect investors, to try to hold towards par and reassure that there's some amount of principal protection, perhaps going after different capital pools, different other credit pools. I mean, we've talked about some of this behind the scenes. There are things that have not been done yet that many of these companies and the names that we've mentioned are looking at and they have in front of them. There are many different products that can come to market in the next 5 years. And I think anybody running a Bitcoin Treasury company that wants to compete against Strive and Strategy in terms of digital credit just needs to think in terms of how do we create a differentiated product? Like, what are we seeing as weaknesses with STRC and SATA? And how do we design something from scratch that is designed to be the counter to that? And again, I keep coming to this idea of principal protection. We would hold a lot closer to par if these Bitcoin Treasury companies were willing to actually guarantee principal protection, from their Bitcoin reserves for the principal that the fixed income investors buying these products are taking on. So I'm doing some work behind the scenes there. I know we're all kind of talking behind the scenes, and I expect to see a lot more in the next 24 months.
Yeah, sounds good. I think we'll kind of leave it there. Yeah, it's good conversation. I can't wait to see how the pref market evolves. It's nighttime. We get another one of these products in Europe in a different capital market, because I think there's just endless pools of capital that are going to be allocating to this. So for Chase Palmieri, Miller Cole, thanks for joining me, guys. We'll see you next week on the Bitcoin Treasuries Takeover.